Lena, what happened to the 10-year in the US? We're at 2.292 now. Is it being dragged lower by Italy, for example, or is there something else going on here?
Vonnie, I think the 10-year US yield is a key indicator. To me, it is the new VIX because it's a great gauge of where we are in the risk cycle, where we are in the growth cycle, where we are in terms of US fundamentals and where we are in terms of US versus global growth fundamentals. It's really the litmus test of market confidence. And what we've seen now is the 10-year basically moving below the Fed fund range, which really means a decoupling between financial conditions in the US and the Fed's monetary regime towards a globalist view. Yes, of course, the return to stress, the return of stress to Europe's periphery through the return of political risk, as highlighted by these European elections, but also, of course, through the return of fiscal risk, of credit risk, back into European fixed income markets, is a destabilizer for portfolios that have very much counted on high yield performance this year to perform well. So in that respect, I think the drop of the US Treasury yield is an indicator of growing uncertainty, heightened political risk internationally, but also, I think, an indicator of the health of the risk balance of buy-side portfolios after, let's face it, a first quarter this year that really very much wrote the checks for the rest of 2019. If we're lucky, I think if we're lucky, we're going to see some sideways trading here and no further escalation of risk. But it's quite clear now that we're past that cyclical peak for earnings and the cyclical trough for credit spreads, and that means that US 10-year yields are going to be very well supported here.